have a lot of stuff up there. Hey guys, good morning. Welcome to Trading Pomodoro. This is Dontez Lindsay, General Manager of Ducks Trading LLC and the lead trainer of Stockcraft. As a disclaimer, I'm not a financial advisor. Anything I say after this point is for entertainment purposes only. Now that that's out of the way, let me open up my screener. So today we're going to trade. Man, I got distracted for a second. But what was I about to say? So yesterday we made a play. We made a play on GRVI, and I want to say I made like 13, maybe 15% on that. I kind of got cheated like 40 cents, like 20 each way, like entry and exit. But overall, it was like a B trade in terms of like grading system from like school. But today we are looking at JSPR and LMFA. I borrowed shares for LMFA and SNOA and JSPR, mostly because they're kind of a bounce short. Now, JSPR, this is something I do not recommend trading like a bounce short right now. If anything, I'm kind of betting on this to kind of break out and become a multi-day runner, honestly. And then I'll try something with that. So before we get any further, like how you guys doing? I'm just gonna try to ignore this 5 to 15 minutes beginning because it's just gonna be filled with a lot of noise, a lot of early shorts that are trained from the market plays yesterday, especially the people that didn't get in a JRVI, and I'm just gonna try to wait those guys out for now. Because if it falls right here, it's barely worth a short anyway, barely meeting the criteria for minimum range required for the bounce short I'm trying to execute. But other than that, how you guys doing? Let me pull up the chat. Now, over here. There we go. And then put OBS on top. Okay, that's harder than I thought it would be, but it's fine. I think I'll take this out for full screen, and I can. All right, doing good, just watching and learning. All right, sounds good. What do you call it? Anybody trade yesterday? Like even if you don't trade, just make sure you stay consistent with your learning. You can kind of see this JSPR. A couple days back, it went up to 18, and I was banking on 15 for the second day to like push into that, and then that would have been like a decent actual bounce short. But now there's a day in between. Some of the reward that was like trapped in that area has been already taken out, and so that makes it really weak. Similar to what we were trading yesterday, GRVI. It took a little bit of the resistance out, and since it was close, it took out like more than normal. So this actually has a higher chance to break out, and so that's why I'm not that adamant about shorting this, especially at like 18. But technically it is kind of worth a short, but a very small one. I have my glasses on. Oh, let me take these off. So, salutations. I know where I am, Caesar. Good trade yesterday on GRVI. Oh, thanks. Dude, it was a long trade. Like, hold on. I want to make sure I don't miss anything, because new tickers are coming up on my scanner right now. What do you call it? My stock to trade, or not stock to trade, my Stockcraft. It's doing some things. How was I doing? Okay, so yeah, that's not the main play. My main play today, I mostly just want to see how that one finished. But where are you at? My main play today is LMFA, and that's mostly because there's a lot of resistance I can short into, and there's a lot of resistance it has to push to even get that far. And then the people that are going to give us that push are those gorillas and the people that are going to get squeezed. So we're probably not actually going to see a trade until after 10 o'clock, or at least 9:45. But we just have to basically see how these open. Really upset that SNOA, again, I was saying that JRVI and other tickers in the past, couple weeks, including CEI, have trained the traders that aren't used to, coming in every day and having to wait a little bit, or they know what they're doing. So a lot of people are just chasing, even in the pre-market. And so when I got these shares, I got it when it was $7, went up to $8, and I'm trying to trade around $10 or something. Most of the people were short and taking their stuff. And so I'm still going to keep those shares for the end of the day, hoping that it goes up to at least 8 something, using the resistance from starting at 8 and hoping it does some type of pressure up to 10. But if it goes to 1 o'clock, that's pretty much off my play. I only spent $70 on the borrows for that, because I bought it early enough at 0.004. Similar thing with LMFA. Yeah, similar thing with LMFA. What was I doing? Yeah, let's go to 5-day. No, that won't help. 2-day. A minute. Yeah, similar thing with this. This has a lot of resistance around, well, it's in the resistance now, at least 200 million. And the estimate puts it at minimum 100 million. But we're going to see how that really opens in the first hour to see what kind of liquidity we're working with. So I could technically take a short now, but it wouldn't be high odds. And so I'm planning on a big squeeze before I put some real size in, because again, I'm under PDT. So I want to be very selective with my trades. And that's what you want to do when you're above PDT, just to gain the technique. But let's see. Yeah, the consolidation was long. Yeah, he's Supreme DLB. He's talking about GRV yesterday. The breakdown, there was 3 different cracks on GRVI yesterday, and it was a long day. And we'll just show you. So basically, I entered. Where did I go? I tried to enter around 9:10. I executed around 8.91. I went all the way down. I added again on the bounce at 8.5, and then that brought my average down to 8.7, 8.6 area. And then I held that for 3.5 hours. Big crack happened, and at that time I was on the one to 3 hours of sleep. And so soon as I saw that crack, it went to the bottom. I saw there's a slight spread at the level 2, and I'm man, this is about to halt. At that point, I made a very emotional decision, even though I was consciously aware of I needed to hold this for the rest of the day, and they could potentially gap down the next day. It's just, this was barely ideal in the first place, and I just covered emotionally at 7.2 is what I thought I executed, but then I got cheated 20 cents. And so total, I got cheated 40 cents on the front end and the back end. And so, I left at least, based off my position size, 700 on the table. But I'll take these trades over a loss any day. But I definitely only executed 60% of the technique, so I can't feel proud about that, even though it does come up on as a win on my statistics. But yeah, I just wanted to see how that opened today, even though I'm not going to really try anything with that, just to get a sense of how this stock works inside this specific market cap and specific float. You want to always do that kind of homework even after you get the job done, just so you can maximize your gains, minimize your losses. But what do I say? AIRI. I don't know why I brought that up. But what do you call it? Yeah, you see those early shorts in there right now, and they have a reason, but there's no consolidation up there at 18, and I already got past that point. And I don't really know the reason for this spike, But with this little volume, and it goes past all that, other than like, you know, the reward that was already taken out of that drop, and like pretty much all the people that, how should I put this? At the end of the day, each one of these tickers are companies, and you want to think, what can the company do right now to bait you into paying them, so they can, you know, pump up their stocks, call a warrant, or not call a warrant, execute a warrant offering, and all that stuff. Long story short, I'm waiting for these guys to squeeze, and then I might even dip by this. And like, again, this is short bias chat room. That's pretty not cool. But if I don't dip by it, I'll at least like think about dip buying it. And so that's gonna help me later. Let me go to the chat before I go on too much of a long rant. I should probably slow down on these things. So, anybody have any questions? Because we're gonna be here for a while. I just wanted to get all the minimum things I think would be important to keep watch on. Something like that. That's not, it's not important. LMFAO. Where you at? I put LMFAO. JSAI. PR. Caesar asked me a question the other day, and well, hold on, let me answer this one. Can we have StockCraft discount for being part of the Ducks chat? So the prices for like StockCraft right now, they're determined based off of like short to medium term expected growth right now. And the discounts, I think you can get a discount if you're in the Freedom Challenge. But that was mostly for a small sample, just because the platform isn't technically even like out. We're kind of in like a beta soft launch stage, and the only reason we launched it is because even though we got, you know, put back like 2 years, yeah, we got put back 2 years because of quarantine and a few other like a lot of people died, but pretty much, and we had a few people building things for us. At the end of the day, we ended up just buying something and then slightly building on top of it and putting in our own image. And we're still not ready to do stuff, but we had promises we had to keep. And so like, this is the complete bare minimum that we have out there right now. And so we don't want to do any type of like push towards something that can like, if you have the question about the discount, I'm not the right person to ask. You would have to email the support at stockcraft.net. I'm gonna just leave it at that for now. But like, in my opinion, like, I'm the lead trainer of it. Even though I'm just like, you know, really playing with it, then I'm gonna tell you what mistakes I have. That's the only reason like I'm a trainer. But when it comes to the actual like prices and anything in like that kind of area, regulations, there we go. I'm not the right person to ask. You have to ask support. If anything, I'm just the middleman and the manager in the entire hierarchy. And you know how that goes. What do you call it? Like, so I can tell you some stuff. I just don't want to overpromise you and then you get disappointed. So I'm gonna leave it at that. Other than like, I know discounts were given out, but it was only to like a very small sample of people that tested the platform before it went out. And then like, you don't need to test the platform to know that it's not ready. But at the same time, there's so many things you can do with it like right now. Like, you can still test your strategies. You can still use it as a paper trading function. You can still use it as a screener. If the data that we have coming in, like comes in, is definitely going to be, you know, decent in terms of like accurate data, but you're still going to be missing a few of the things that I personally want when I trade. Like for instance, well, I'm not going to go too detail in that, especially if there's a trade in the way. But good question. Just those questions will be better answered if you go to stockcraft.net. What was I saying? If you want something like what's possible in there, then I can give you like a reference because, you know, I know what kind of plans we have for that. But in terms of, you know, sales, no, I'm out of that. Yeah. So, what am I doing? Can we have StockCraft discount? No. Do you think LMFAO would be a good long scalp opportunity with possibly running 7 to 8? You know, yeah, that's pretty possible. It's pretty possible. Especially since there's no consolidation or like obvious resistance stopping it. It's just you have to generate a lot of volume to exceed like almost 400 million. How should I put this? So at 5 down here, the resistance is still like really strong, and it's like only 200 million that's being like activated. And what do you call it? It only took like a 50 million volume to like reach up to this point now. And so if you add these two like together, minus like the slight bit that was like canceled here, you still have a couple hundred. And you know there's enough volume in the current market that like this is actually considered pretty breakable. And there's enough people that were trained by the market to pretty much go like all in like a little too early. And so you know those guys are going to get squeezed out, but they're still using their money, and so you have to wait till they get squeezed out. And so if you do your strategy, it will be a big like the biggest concern would be like when they're going to get squeezed out, because that's when you want to make your opportunity, like the moment that they get squeezed out. And so you want to let me just pull up. I wouldn't start your long strategy until it breaks at least the high of what do you call that, aftermarket. And then once it clearly breaks that, that's going to bring in enough attention to like squeeze. From the open, there's like $5, and you should be expecting a 20 to 30% push, like pretty much minimum, if it does do the squeeze that I'm talking about. And so if you do just like very simple things like 5 times 1.3, actually it'd be closer to 5 minus 3 times 1.3 plus what was the 3. Hold on. Yeah, it just has to break the market from before, the aftermarket from before. Basically, you want to create a structure based off of the likely outcomes, and then create like a specific like key point. And the only thing you really have to go on in terms of like your long, since there's no support, and there's kind of no resistance, like intraday at least. I don't know, like the more I talk about it, the more I'm just like, I wouldn't do it, and it doesn't sound like a really good idea, but at the same time, it's still possible. And so I'm very conflicted about that. Like, for the people that don't know what I'm talking about, he was asking if it was okay if I go long to like 7 to 8. And I think there's a lot of resistance, but this is like I wouldn't make any plans off of that. And this would be the perfect moment to go long if it does do the squeeze that we're looking for. And that squeeze won't come till like 1 o'clock though. And so it's a big commitment that you would have to take. And in terms of risk management, you want to have something like solid to risk off of. And the only thing they would like be able to risk right now is like the the pre-market consolidation. And so, you know, what should I say? Like 5.1 would be pretty much where you'd enter, and then you'd risk like 5%, 5 to like 10% to be the only thing worth it. And then once it finds some type of support from there, it should double, like in theory. And in that, the time that it takes to double, there's going to be a lot of short-term fake outs on like the 2 minute, 1 minute, and 5 minute. But if you stick to the like 15 and probably like 15 and 15-minute candle, then things should like feel a lot better. That's because like this will help you with like momentum or reading the momentum. But the main thing is you want to generate enough volume to trap people at this level, like between where did it go to right now, like 5.75 and like that consolidation area around 5. If enough people get trapped here, then they get impatient after a couple hours in the consolidation, then that's where you're just like, I'm going to make my long around, you know, the back end. It's just now it would be kind of gambling. You want to make that type of decision a couple hours from now and just see how it develops. And you want that type of pattern to show itself. But it's also good to be mindful that you're already underwater because we're inside this large resistance. But at the same time, this is nothing compared to what could potentially happen in the next hour to 2 hours. So you pretty much you have to just wait. Now, what am I doing? What was the next question? Do you track market cap from before the run or when you catch it? Before the run. You always want to track initial market cap because market cap scales with the price. And so LMFA, you go to FinViz, LMFA, what? LMFA. I keep saying LMFAO, like I'm a troll, but what do you call it? Yeah, so starting market cap 17. It went up to 28, and so you see when this was like started, this was the initial market cap you determined yesterday, and you want to keep that standard that all the initial market cap, float, and like pre-market volume and those this is where it start kind of statistics. You want to track just those because at the end of the day, you're making predictions. And so you want to see how it develops, and everything needs to be relative to itself. And it's better to make relative scenarios based off of the initial, like I don't know the right words. I just know how to like give you an idea of it. But that's what you do. And so now it's at like 28, and so that just basically means from 3.44 to 5.27. That just shows how much money is in there for it to go up 100% at this point. And the 17, that pretty much doubles when the price doubles, but it's not like a direct correlation because it has a lot to do with when people mess with the supply, and then that can happen like pretty easily when you have shorts, because you know you're always constantly messing with the supply, like because the shorts are they're not empty supply, but like it's something you'd have to look it up to understand, because there's always kinds of ways to like mess with the supply. What am I doing? So next question, what is the logic of adding up individual resistances when stock price is close to each other? Yeah, so the logic is so a little bit psychology. Yeah, actually a lot of it psychology. The people that are trading, they're traders. And so there's all kinds of hedge funds, firms, and people that are systematically trained to track specific statistics with a calculator. So you see these very basic, calculations I put in a calculator. That's just to get me thinking in the right direction that, hey, the firms out there, they're looking for these specific percentage pushes. They're looking for this specific amount of resistance. They're looking for this specific, what do you call it? Like ABCD pattern, like this specific consolidation, this triangle, this candle, and like that type of stuff. And what you want to do is you want to burn into your memory as many of those that are useful as possible, and then just paint those on the chart, not physically, but like mentally. And you can do that like pretty fast within like 30 seconds, and then you're going to weigh your odds, and then you try to take it another step. It's all about framing, and then you start with a bigger frame, and then you just narrow it down. And that's where the individual resistance like idea comes from, because when you come out to each one of these and you look at like the individual resistances, you're looking at it as like a push and a pull. Like which one has a fixed amount of people that are trapped there. So out of this 200 million volume, there's probably 10%, maybe 15% of people that are trading on their phone. There's people that are like in their broker, stuff dropped too quick and things like that. There's, bag holders and everything like trapped in there. Those people add up. And the thing is, you don't know the exact amount, but what you can do is you can have a average percentage based off of the relative max, and then you can add those up, and that becomes a pressure, and then you apply that pressure systematically, like almost like a gravity. And when you have the individuals versus the the consistent resistance, those are they're slightly different in nature. But as soon as it goes around that same price, everyone thinks in terms of like half dollars and whole dollars. And so the more you get to like around the same price, like with these two, you can start to add them together, because people are looking at both of them at the same time, because you're looking at that price level too. Like you're not just looking at that time in history. You're looking at how much influence is at this specific level. And that's pretty much the same concept with market cap and float ranges, because everything is within a zone. And then within that zone, you're just trying to see how much gravity is there. And then you're measuring that amount of like gravity or pressures. And that's all I really have to say about that. Okay. Initial state, I think, is the word. Oh, initial state. Yeah. In the not initial public offering, but like in initial like stats, you want to track those. So when they grow into something, next week, tomorrow, next year, you want to see what it came from. And when you look at something from like its initial to what happened in whatever like price action, because time kind of really doesn't matter, whatever price action to get to like that price, that's a better judge or metrics to understand the amount of strength first required to get up there, and the amount of strength and like what's lost in between. And so you can kind of judge, like you probably get what I'm talking about. Like you just have to have that initial to understand what's going to happen both ways. And then everything else after that, it depends on what you track. And so, everything comes down to price action and volume, no matter what type of trader you are. And you also don't want to overthink or overfit your data and overfit your strategy. And so you want to keep it as simple as possible, because everyone else out there, like the 90%, are doing it as simple as possible. And then those 10% that are actually making money, they're just countering the 90% that are making that are not patient, going in a little too early, emotionally unstable. It's a human hierarchy, and the only way to get better in the human hierarchy is to either work smarter or work harder. And so you don't know, but you have an idea because you're human. And so as soon as you make those mistakes, you just try to put a logic behind those mistakes, play with that logic, write it out, draw it out, whatever you really need to do, and just understand how would you beat yourself. And then same thing with these companies / tickers. Every time there's some type of news, offering, pumps, manipulation, market makers, everything like that, just put yourself in the same shoes as those people. If you had this amount of capital and then you had this amount of time to like grow this capital, what's the best strategies you would do? Go out there in the online and just be like, hey, what's a strategy from the 80s, the 90s, and like early 2000s, like the stuff that's free in books, and like they'll give you the bare minimum concepts and logic behind it, and then you just take that and then you create your own. And like the thing is, you start creating stuff and you think you're a genius, and then you go out there and you're like, hey, I created this strategy, and then other people make you feel bad because they'll just be like, hey, that was actually created 20 years ago or 15 years ago and stuff like that. Or be like, hey, this looks like a mixture of ducks, this person and that person. It's all the same stuff. And at the end of the day, 90% of people lose. And that's just because, there's 3 different managements you have to, you work with at all times. And so you can't really afford to slip. And, that's risk management, ego management, because you realize how easy and how much free money is out there. And then like, you become your own person. But like that's all I'm going to say on that. What am I doing? Oh yeah. If you like the content, like and subscribe. It really helps the growth of the channel. And I'm still waiting for the people to get squeezed on LMFA and what do you call it? SNOA. This kind of looks dead. This might just be a wasted borrow. Another thing, like the ego part. What am I doing with this? Yeah, so I really want this to go to like 11 or 12 area, but it doesn't look like it's going to happen today. Even though it has decent volume and it's a low float. Yeah, it's nothing worth watching. I'll just keep it on my watch list for now. Take this off just so I don't confuse me or you guys. So the reason I keep this one on the screen, I probably really shouldn't be on like this platform, but what do you call it? So I covered here, like I said before, but it's super obvious when you use our techniques that I should have covered the next day, and I could have saved my day trade. But this is where like ego versus what is the right thing to do in terms of principles. This thing is dropping pretty fast. Let's see. Yeah, but once you know what's like the right thing to do, even though I know it was right to like hold this overnight, I have a tendency, since I'm under PDT, to want to hold things overnight just because. And then the thing is, one of the principles I made was to not just consciously hold things overnight just because I'm under PDT. And that's originally how I took that big loss on AMC, is because I was just trying to get better at being overnight. And that was a 10K loss, just trying to practice my ego, or practice controlling my ego. What would that be? 3 months trades. Yeah, this one right here, July 21st. So July 21st, where you at? I know it's like the biggest one. Where you at? There, this one. Yeah, so like this was a complete conscious decision to like try to forcibly control my ego. And like, 40K, that was twice as much as I had in my account at that time. And I'm just like, I'm going to make it all back. I'm getting back above PDT. And then like, at that time, what do you call it? AMC and GME, you could just hold stuff and it goes 10% either way. And like, it was a large enough stock that you didn't feel too much pressure, like, because it would move slowly. But I got dropped overnight. So that's all I'm going to say on that. Next, what is the third management? So ego, and statistics. So, I could probably bring up a note on this to make it a lot easier. The only reason like it's hard for me to gather my thoughts now is because I was told I had to limit the amount of information I give out in terms of my notes, because it's sensitive or something, and especially when I create notes that I don't categorize yet, and then they just get flashed up there. Yeah, I got chewed out a few times, but what do you call it? They could fight me. But what was I gonna say? Yeah, if you watch this, yeah, I'm talking to you. But I'm slightly trying to distract myself from the LMFA, because there's so much FOMO that's just gained from like seeing these potentially less ideal plays just drop early, and I already know the people that got trained to go in early are doing their thing, and I'm just gonna wait for them to do their thing and probably come back after like 11 or something like that. And then same with this, I want to see if this does do like a reversal and just break out, probably push at least to like upward like 25s or at least 21 and do some type of consolidation. But what am I doing? Back to the questions. Did I answer that question? What is the third management? Yeah, there we go. So I know I created something really recently. Where you at? I'll just put this over here for now. Management. Here's one. So open a new window. There we go. So here we go. So the essentials in like penny stocks you want to do. That when you go in the red, I want to make sure I keep at least one of the scanners up over here on this side. Yeah, but there we go. So when you go into day trading, it's a front-loaded business. It's an individual hedge fund, and like in the hedge fund, if I could say it in like one sentence, what they do is they track a lot of statistics. And then, they build an algorithm, or they like give the job to like a couple guys, and they're just like, hey, your job is to think long term. Your job is to think short term. Make executions based off of this statistics in this area, and create a specific winning percentage, and make sure your strategy is stable enough to like to have an edge, basically. And that's the bare minimum. Like you have an edge, and then once you have enough edge, which might take you a year, might take you like a couple months, depending on your comfortableness with statistics, reasoning, logic, and like those type of science fields. And then also a lot of how much do you know yourself? But once you have that like flat strategy, you could put as much money as you want on that. And you could trade it on the big blue chip stocks, like $100 plus stocks, and then those will move like really slow, and your strategy is like very stable. And like that's what you see in those scalping strategies. They'll try to get the most stable, and then they'll get like something really small, but they'll put a lot of size on it because they know it won't break. And so you probably heard the statistic, don't go over 1% of the float all the time, from Steven. That's what he's talking about. Like that's the dollar amount before his strategy breaks its stability. And so like once you break your stability, that's when you start having those bigger losses. Now once you break your mental stability, that's when you start having bigger losses, because you are making those bigger losses. And so when it comes to like losses, main thing you want to worry about is the amount of equity in your account, or the amount of cash in your account, is what that means. And a lot of people out there, they're trying to maximize their gains and minimize their losses. And so they borrow money, which is leverage. And you make leverage based off of your relative equity. And so that's the amount of cash you have in there. And so if I have $10, oh no, let's make it simpler. If I have $100 equity and I do like 4 times leverage, that means I have 400 buying power to use to make more money. But that also means my losses are going to be 4 times bigger. So I'm going to have to scale my risk management quality with the amount of ego that I have to be able to put on that 4 times leverage. And if I don't proportionally scale at least these two I don't want to say tools or weapons, but like that's what like my mind sees them as. But like these 2 skills, these primary essential day trading or just trading in general skills, you will see some unbalanced losses and wins. And the thing is that third metrics that you have to have, it will be like statistics based, because that's what most of this stuff is. It's just controlling your ego, controlling your risk management. And like when I say risk management, I'm not saying, statistics are going to give you like a specific risk management based off of the results. Risk management could be something simply as every time you win, take out money. Risk management could be as simple as every time you take a loss past like 3 consecutive losses, you want to size down your position. Risk management could be as simple as if you're, hold on, I want to make sure this is okay. Yeah, we're good. But risk management could be as simple as when it's like little life hacks that you do to yourself to limit any kind of obstacle that'll keep you from making a little more money or losing a lot more than you need. And it doesn't have to be based off of numbers. It can legit be you just turning off your screen, cutting your mouse. That's a form of risk management. Cutting your mouse when you realize you have too much FOMO, you don't have your emotional state right, and things like that. And that's the way you want to look at this stuff. Like very conceptual. You do what you have to do. Like you have one goal. You're trying to make money, and you're trying to make money safely. The only way to do that is to have faith in something, for like a structure, for a system, something to build stability. And then based off of that, then you want to add in like whatever kind of filter you can to maximize the gain, minimize the losses. And so just to add another, some type of fear to run from, you want to create a wall of possible things that can happen to you so you can run from that idea. And then you also know that there's free money in the market if you know how to like safely get it without being on the back end of someone else's plan. And so that requires you to watch a lot and miss a lot of opportunities. And if you miss enough opportunities, you get to recognize what a real opportunity looks like. And then once you have a decent picture of what a real opportunity looks like, then you take the safest part of that entire opportunity. And now if you're only looking at the first 2 hours of the market, just look for the safest part in that 2 hours. Then you want to gradually, after you like master that 2 hours, gradually open it up to the rest of the day, rest of the strategy, rest of the market. And you just have to have something stable and statistically proven before you build from there. And like, that's all it is. I know it rambled on and it kind of went like a lot of circles, but like that's what it is. Like, familiarity with statistics, risk management, and like understanding its conceptual like benefits, and then ego management. Anything that can like mess with your like emotional intelligence, because once it goes below a certain threshold, you're not capable of trading effectively, because there's a certain level of focus that's needed to trade the way that that makes you not only better today but better tomorrow. And it's a personal kind of journey that you have to go on, and you won't understand it until you try your best and then fail, get back up, do it again, look at someone else's stuff, take a little bit of it, do your own thing, add a little bit, win a little bit more, and then you get addicted. That's why most people fail, because they quit within the first 2 months. The people that do see some profits, they don't know how to keep it because they don't have risk management. The people that do this for like 2 years, but they do it in a like part-time kind of way, and then they do it in a part-time way that's not smart, that's why they quit. The only people that do make the consistent money or the big money here are those one-hit wonders, and then they just never did it again. Like it goes into all different types of stuff, but that's just my rant. Let me go back to the questions. I covered up the chat. What is the third management? GRV bounced back to 8, dropping the hammer. oh no, you're saying if it does, that's what you're gonna do? Where's my? I'll use this one. GR. VI. If I answered your question, yeah, just let me know. I don't even know. I just spend most of the time yelling at you guys. I'm just like, hey, because I've seen too many people go down the wrong road, and I've been down that road too. In terms of like, I thought I could half-ass this. You can't do that. Trading is hard, and it's harder than you think, and it's harder for different reasons than you would think. It's yeah, but that's what this channel's for, just to show you like how to grow a small account and the amount of consistent effort that it takes to do that. So, what do you call it? Yeah, he said it bounced back to 8. No, it didn't. But if it does though, yeah, there's a lot of consolidation up there. We're looking at just go in the daily. 5 1. Yeah, 120 right there. Where's the 10-day 5-minute? Okay, highest is 10. So from here to about here. Where you at? Do 30 minutes for now. Yeah, that gives me 1, 2, 3, 4, 5. So yeah, that's about 20 million in that consolidation, which is like pretty easy to break, but they would also have to like get past all the bag holders. I'm just assuming there's like 15, maybe 20% stuck in that panic candle, and then a lot more that were trying to dip by out of like this entire uptrend. I'm thinking at least like 5%, and so you add those two up together, you have a lot of incentive to use a small bounce short on that. But if it did go from 6 to 8, that's $3 on a $6 stock, so that's up 50%. That'd be the bare minimum for a bounce short. And so it'd be worth a small short, very small. What am I doing? What was it doing? LMFAO. Okay. So they still haven't been squeezed. Oh yeah, they still haven't been squeezed yet. The tickers on my watch list, they're looking juicy, but they're still not ready either. Yep. There's nothing else right now. Let's see. Oh, did I finish what I was talking about? Oh yeah. So the reason I brought this note up is to give you something to run from, and you already know what you need to chase. You need to chase technique and to refine that technique, but you also need to know the more money you lose, the harder it is going to be to come back. And so we talked about equity and how that's the cash, and how if you over leverage yourself and you lose more money than you plan to hope on a smaller percentage, you could be under like 25% on your entire account's equity. And, it takes you a win of like 33% of your entire, like equity at that point. So if you had $100 and you lost 25, you're going to have to use that entire $75 and win at least 33% before you cover the losses that you had. If you lost 50%, you're going to have to make double the amount with that $50 that's left. You know, if you lost 75%, you're left with $25. You're going to have to do that $25 times 4, you know, probably on a long, because you can't make that short because the maximum you can make is 100, just to cover your losses from that 75% down on your equity. And, you know, some people don't realize that because they all think it's just like a 1-to-1. Like, oh, I lose 25%. If I go back and get 25%, I can get that back like one trade. No, it doesn't work that way, because you still have fees, and you have buying power, you have all kinds of stuff. You even have your emotional resistances after you make those mistakes. And, you know, you have to plan for pretty much 2 people, and they're both you. And then, like, you have to know the enemy and know what's possible to be able to even create a plan that's credible in the first place. And so I'm just going to leave it at that. Back to questions. When you identify a resistance level, how do you know when to short it, since the resistance level, I think, is a little bit different for everyone? See, that's the thing. It's a little bit different for everybody. And so you have to think, the main people that are moving these stocks, they're in groups, they're in chat rooms. And when you have enough people in a room or in a project or in the same mindset or anything like that, it creates its own personality. And then those, what should I say? Those group think personalities, they have a fixed amount of, like there's a little hierarchy in their own, like personality. And if you can get a rough idea of what they're thinking or like what they're doing, like especially the ones that just play with their calculator because they were trained to do so. So like we're talking about those highly agreeable people that don't know what they're doing. They just go in here and just push the button at 20%, push the button at blah, blah, blah. You're trying to go after the easy money. And the only way you can do that is if you have a bigger frame. Like, so you see the trees. Oh, no. You see the forest. You don't see the trees. That type of stuff. And getting to that point is going to take a lot of studying a lot of trees. And yeah, my metaphors are kind of funny, but it's going to take a lot of studying the trees to understand what the forest like looks like in terms of its overall structure. And then once you get an idea of, you know, what a tree looks like, what a forest looks like, then you can understand how to do whatever you want to do with that tree and forest. Now, what are we doing? Again, like the reason I mentioned hedge funds before is because that's the big people, that's the big groups that are doing this. Like the exact same stuff that you're doing now. You're just an individual version of that. And so you can track the same statistics as them, as much into detail as those guys. But at that point, it really is not worth it. You only just need the very bare minimum. And you have to treat your trading like a business. There is no days off. Like if there is days off, but you have to have enough attendance. You have to earn your 2 weeks, and like you have to refine the skills and like all the other stuff. Like anything you would do in a normal job, you want to do that here, because this is something that you're trying to use to like feed you the rest of your life. And the only way you're going to be able to do that is to create the technique. And the only way to create the technique is to recognize that it's a human hierarchy. You're going against other humans. And the only way to get better is to work a little harder. And if you can't do it in the short term because like you can't handle it mentally, you need to think about compound interest and do it systematically and incrementally over a long span of time. And so you have to choose which one you want to be and then just go for it and commit to it. A lot of commitment. Hey, I was like trying to make a video the other day. I even tried to make a script, but I never use scripts. I just write them. Yeah, so that's enough on that. Where did you cover your GRVI yesterday? So let's see if it went to Kimpo yet. Well, I covered Yeah, I thought I said it earlier. I covered into right before the halt because I was just tired of the stock. I recognized that I wasn't very comfortable with I covered here at, I pressed the button at like 7.21, like right at the bottom of the halt, like right before, but it got executed at 7.4. What was I say? I don't know. I'm not disappointed, but like I'm definitely not happy. What we call it? If I go to GSVR, there it is. Yeah, 14% gain. In at 8.9, out at 7.43. Yeah, net gain 1.4. So overall performance this week 100%, one trade. Hopefully, if this behaves or not behaves, if this turns out okay, this might be the next trade. But you know, if it's not, I'll just take those two trades into the next day, or might dip buy into the weekend on JSPR. That just went down $4, so that's enough range for people to believe that's a dip buy. And so let me just bring this up because I'm not going to deal with that right now. TSPR. So 2 day. No. Now we're still looking perspective. So let's keep this on there. Okay, so 15. See, I got real confused because like you see over here it says 12. And so I was like, wait a second, there's no way to pull it back like that. Okay, see now it's better. What am I doing? Make sure this one's there too. I have to slightly distract myself. All my energy comes into the wrong areas. Like focus. Yeah, the focus you have in trading, that's another crucial skill you want to have. You want to focus on the right things. And this is a good segue, but like in the Dux Trading LLC, we tell you what to focus on because everything else is pretty much noise. And like the thing is, even the noise has its own winning percentage and its edge there, but you have to track enough data just to only get like barely an edge in that. And so you want to combine factors that are based off credible, profitable strategies already, and then add in that extra edge later. But there's an order to this stuff. And most people, like the 90%, they do this stuff out of order, or they do it not enough to make it stable. And then all it takes is 1, 2 losses, 3 losses, and they don't have enough experience to keep their gains, and then they end up back at 0 or worse. And like that's how it goes. Now, what am I doing? Initial stage, JRVI, bounce back to 8. I'm dropping the hammer. You right? LMA, bummer. Early shorts. Yeah. We knew the early shorts would come in. It's just I'm still banking on them being squeezed. So it's up to 40 million volume in the first hour. So we're expecting at least, what is that? 160. Yeah, 160 estimate. We can, like, just based off of that estimate, we can make a curve, like not an equity curve, but like some type of gradual line of volume. Like I know how to do it on this one. So where are you at? I think it's LFMFAO. Let's hide these for now. And Caesar asked me a question the other day about if I can add in a specific indicator for what was it? Like tracking like volume during a consolidation and stuff. And yeah, there's ways you can do it. You just come up here to file, indicators, and you systematically create each individual filter needed for that. So that's just for the people that want to do that. No, 2 minutes. So if I wanted to track like this consolidation and stuff, I can definitely have it in a way where I'll be like, hey, start tracking when it reaches this threshold. Start tracking when it does that. But it'd be very... No, it probably wouldn't be that hard. No, but what am I doing? Yeah, because these are all like relative to whatever frame you put on it. You see, like up here, we put 2.41. That's based off of the frame that, 5-day, 2-minute frame. If I put this at 5, that 2.41 becomes, 4.51. And so that's where it gets tricky. So you have to legit make a strategy for each one of the frames that you look at. And so I usually stick to like 3 main ones, 2-month, 15-minute, 2-day, 2-minute. And then like pretty much anything from like 5, 10, 15 days, depending on how far the resistance and stuff is. And then 5-minute candle, because that's what is available to the retail traders on their phones. And, if you can keep it simple as that and then create not even data mining strategies, but like triggers that plot the data based off of those specific triggers at that moment, then you solve the problem. But other than that, let's finish these rest of the questions. We're over time. When you identify a resistance level, how do you know when to short it if it's since the resistance level? I think this is a little bit different for everybody. Yeah, I talked about that. Averages. You just have to have a working average of what a trader is looking at. And then you have to make a standard for yourself. And then if that standard's wrong, you're just going to adjust the standard. But at any point, you're going to have some type of standard. Just like how we were talking about the initial market cap, initial float, initial like statistics. Those are the standards that you're going to have relative stats for if you want to basically keep yourself in control, even though you don't have control in this, but you want to have at least the temporary delusion of control, because it's profitable and it attaches directly to your ego. So where did you cover your GRV? Yeah, answer that. Think the market will heat up soon, anytime soon? I think there's going to be a crash soon. Just because, there's a lot of people in the market right now, and, Christmas is coming, and that's always been a hot season because everyone has like incentive to spend money, make money. And usually when it comes to making money, and people just that don't know better, like the really naive people, they just go right into like Google and be like, hey, I can put my money in the stock market. I could buy the SP 500, hold it for X amount of time. I heard day trading is liquid. You can grow money really fast. This market will heat up pretty soon. Okay, so there's nothing wrong with having a tree as a friend, Bob Ross. Yeah. I love Bob Ross. Yeah, that tree right there, that's gonna be a little secret. On that note, thanks for watching, guys. My name is Dontez Lindsay, General Manager of Duck Trading LLC. If you like the content, hit the like button and subscribe. You have questions, you can save them for my next live stream, or you can leave them in the comments below if this becomes a video. That's pretty much it. I'll catch you guys in the next live stream. Peace. Thanks, Dontez. Have a great weekend, everyone. Yeah, you have a great weekend, everyone. I keep forgetting today's Friday. Bye.